All right, chapter 5 and 6, periodic inventory exercises. So here I have a whole month worth of transactions that we're going to take a look at. It's a combination of both purchases and sales and how we journalize it and how we plug it into our inventory worksheet. So this example here for the 5 and 6 chapter review. Here we go. You have your inventory method is periodic and it is LIFO. Okay, so last in, first out. Assume that tax is 8.25%. Okay, so on May 1st, that's what we're going to do. We're going to practice journalizing. Okay, and I want you to practice posting it to your inventory worksheet. However order you want to do it is whatever order you want to do it. Okay, so we'll do this together. Okay, so again, May 1st, we end up purchasing 500 brown mugs at $2.65 each. Okay, and freight cost $100, and we bought it on an account from Cuppy's Co. Terms are 5%, 15 net 30. Okay, so do you want to journalize first or do you want to plug it into the inventory worksheet first?
Journal.
We'll do the journal. Okay, so then we purchased 500 brown mugs at $2.65 each with a freight of 100. So it is May 1st. How do we journalize a purchase of periodic inventory? Purchase expense. Good. Freight expense. And how did we pay it?
Account payable.
We paid it on an accounts payable. Okay? So we purchased 500 mugs at $2.65 each. Okay? Oh, actually, yeah. From Cuppy's Co. I think that's the first thing I actually should have put here. We're going to put the organization or the place that we sold it, purchased it from, Cuppy's Co. Right? You don't have to put purchase, and then we can do 500 mugs at $2.65 each. Okay, and they gave us terms 5%, right? 15 net 30. Okay, let's double check that. Make sure that's correct. So here, May 1st, we purchased 500 mugs at $2.65 each. Freight was 100. And on an account from Cuppy's Co. Terms for 5%, 15 net 30. Good. So what's my total purchase expense here? If I purchase 500 units at $2.65 each. $1,325. Okay, good. Freight was $100, so therefore you should have a grand total of $14. Good. So now that we completed our journal, let's plug it into our inventory worksheet. Okay. May 1st, purchase 500 units at $2.65 each with a freight of 100. So what's my purchase price here? Right? we're going to solve for it, right? In our journal, it was $13.25 plus freight of 100 gave us $14.25. Okay. So now, because we are using LIFO, okay? We're using LIFO. We need to have a separation between our batches of inventory. So in this case, I need to solve for my average cost per item. Sorry, my actual cost per item, not average. So in this case, I'm going to take $14.25 divided by 500 units. What is my cost per item here? $2.85, okay? Now again, this can be more than that, but in this case, it's exactly $2.85 even. Okay? Excellent. See what happened next. May 5th, we end up returning 15 of those mugs because they were broken, okay? And we got a full refund. So in this case, I returned 15 broken mugs for a full refund. How do I record this refund? Returns and allowance, okay, but what kind of returns and allowance? Not refund. Did we purchase or did we sell? We purchased. So in this case, purchase, returns, and allowance, okay? Now, how did we pay for the items? Right. We need to decrease our liability here because we never paid we never paid Cuppy's Co. So instead of them giving us a refund, right, they're going to reduce the amount that we owe. And by doing so, we're also going to reduce the amount that I purchased with the purchase returns and allowance. Okay. All right. I'm actually supposed to have a chart of accounts in here. Okay. All right. So then I returned 15 broken mugs. Okay. At what cost per item was each? $2.65 each. Good. For a full refund. Okay. So in this case, what was the total amount of my refund for? Right? 2 times or 15 times $2.65 gives you $39.75. Okay. You are not allowed to return shipping. So in this case, $39.75 is what I am getting a refund for. So let's plug it into my inventory worksheet. Okay. So in this case, we need to put this under purchase returns and allowances and discounts. So this was 15 mugs at $2.65. So my total refund is for a $39.75. Now in this case, what I'm going to do here is, because this is my purchases, that's my returns, I'm going to build myself a cost or a goods available table. Okay. Okay? Because in this batch of inventory, right, I purchased 500, but I end up returning 15 of those items. So in this case, I really have right now 485 units. Okay? And I no longer owe 14.25, right? Because I end up getting a refund for $39.75. So now I'm at 1385.25. In this case, I have new quantity and new cost. So I need to resolve for my cost per item for this batch of inventory. Okay? What's my cost per item here?
$2.85, 86 cents.
Right? 2856185. A lot of mumbo jumbos here. Okay, good. So we did the journal, we did the inventory worksheet. So let's see what has happened next. Okay. That same day, you end up selling 10 mugs for $9.99 for cash. Okay. You end up selling 10 of those mugs for $9.99 each for cash. Yeah, I'm supposed to have a chart of accounts here. So you know what you want to use. But in this case, so I sold 10 mugs at $9.99 each for cash. So how do I journalize this?
Purchases then.
Are we buying or selling?
Oh, okay. Cost?
Let's see. Oh, sorry, we're on May 5th. You said, is it COGS? No, we sold something and we got cash out of it. How do you record a sale?
Inventory?
Not inventory, right? Not inventory. We sold 10 mugs for cash.
Cost of goods sold?
Not a cost of goods sold. How do we record a sale?
Cash.
Cash, right? We received cash. Okay. Now, how did we receive this cash?
Sale.
Sales. Good. And what else do we need to charge?
Sales tax?
We need to charge sales tax. Good. Okay. So in this case, right, I sold, let me make a note here so you guys can remember. I sold 10 mugs. Okay. Right, we sold 10 mugs for cash, right? We don't need to specify that we got cash out of it because we have a cash account. Now, each cup I sold was $9.99 each. So in this case, what was my total sales? If I sold 10 cups at $9.99 each. $99.90, good. How much sales tax am I going to be charging?
Pay 21.
Good. $8.24. So therefore, overall, in grand total, how much cash did I actually receive for the sales? $108.14 cash. Okay. Now, because we're doing periodic inventory, does this affect my inventory worksheet? Does this affect my inventory at all?
Yes.
How so?
If you sold.
Okay, you sold, okay. Now, what's the rule for periodic inventory? Do we even keep track of our sales at all? When do I do it? At the end of the period, right? In this case, I'm not even at the, I'm in the very beginning of my accounting period, right? Because my assumption is it ends at the end of the month of May. So in this case, I don't care to keep track of my inventory, right? So therefore, I don't need to do anything with my inventory worksheet because take a look at this. This top section here is your purchases, right? This bottom section here is your goods available. And this bottom section here on the right is your purchase returns and allowances. Where in the world do you see a section for the cost of goods sold? You don't. You only see it here when we need to calculate it when we reach the end of the accounting period. So in this case, there's nothing we need to do here, especially because knowing that we're using periodic inventory, right? We don't know how many items we sold until someone goes down to the basement, takes a physical count, and says, hey, boss, you have this many inventory items left on hand. So your assumption is you got rid of and you must have sold the rest of the inventory. Okay? So now that we figured that out, that we don't really care about what those 10 coffee mugs do, right? We can move on to the next scenario. So then on May 6th, we end up selling 20 mugs for $9.99 each to customer A on an account, and we decided to give them terms. If they pay us back within 10 days, they could receive a 10% discount. So in this case, we sold 20 mugs on an account to customer A.
Cash.
Not cash, right? We sold it on an account. They owe us money.
Yes. Accounts payable.
Not payable. That's when we owe money to other people.
Receivable.
Accounts receivable. Yes, that's when customers owe us money. Okay? Accounts receivable. Okay? And what did we do? We sold to customer A. So therefore, sales and sales tax, right? We have to charge tax. Now in this case, I'm going to make a note here that we sold 20 mugs to customer A, right? And we gave them terms, 10%, 10 net 30. Okay. Right? So we sold 20 mugs at $9.99 each to customer A on an account. So in this case, what was my total amount of sales if I sold 20 mugs at $9.99 each?
$199.80.
$199.80. Okay. How much tax am I going to charge customer A? $16.48. So in this case, how much does customer A actually owe me now? $216.28. Okay. All right. So that was the sales to customer A on an account. So then May 8th rolls around and we end up purchasing, May 8th, we end up purchasing an additional 250 mugs at $2.75 each, with the freight costing $50. Okay? And here we place it on an account from Cuppies Co., which they gave us a separate terms here for 5% if we pay within 15 days. If not, it's due in 30. So in this case, we end up purchasing 250 more mugs at $2.75 each, with a freight of 50. Okay. So how do I journalize I made a purchase on May 8th? Purchase expense, right? So I'm going to copy this information from above here. And paste it here. Okay. And of course we have Cuppies Co., except this time we purchased 250 mugs, right, at $2.75 each. Okay. But they still gave us the same terms, 5%, 15, net 30. So that's fine there. Okay. So in this case, I purchased my cups, right, 250 at $2.75 each. So what's $687.50 plus $50 worth of freight? Okay, should give you a total of $737.50. Okay. All right, and then with that $737.50, right, we're gonna plug our numbers into our inventory worksheet. Okay. Under purchases, so it is May 8th. We purchased 250 units at $275 with a freight of 50, right? Which here we know to be $687, right? Plus my freight gave us $737.50. So in this case, I need to keep my batches separate, right? So I need to solve for my cost per item. What's my cost per item here? $2.95 even. Okay. So then let's see what has happened next. Okay. That very same day, right, you open up all your boxes and you found that 50 of those mugs were the wrong color. Okay, they end up being black mugs, right? And you tell them, hey, you sent me the wrong cups. I ordered brown mugs, but you sent me black mugs instead. And of course, Cuppies Co., right, they apologize for the mistake and they kindly say, you can keep the cups because they're still in good condition, right? There's nothing wrong with them. But to reprimand for my mistake, I will offer you an additional 15% discount. And we accept it. So we accept the discount instead of getting a full refund. Okay? So, how do I calculate this allowance? not cash. We how did we pay for these coffee mugs in the first place? Right, we're asking for a refund, but the vendor said, I will give you a discount instead. So in this case, we're going to get a portion of the money back, which in this case we never paid, so it's going to reduce our liabilities. Okay? And what account am I going to be crediting? Right? In this case, I bought inventory and now I'm returning the inventory. Purchase, returns, and allowance. But in this case, right, the vendor does not give me my full refund. He gives me only give me a portion of the money back. So this is the purchase allowance. So in this case, allowance on 50 black mugs. Okay. How much did it cost me per mug? Okay. Okay. For a 15% discount. Okay. They gave us a 15% discount. So how do I calculate the discount? Okay. Even though I'm trying to attempt to return 50 of those mugs, right? The vendor says, no, I'm not going to give you your money back. However, I'll give you a portion of that money back because we're sorry. We sent you the wrong product. However, these are still good to use. So, how do I calculate a portion of the 15% discount, which is the portion of the money that I'm going to refund back?
You do 50 times 275 times 15%.
Mm-hmm.
And that's 20.62.
So we're going to get back $20.62, or reduce 60 should be 2.5 or something like that. So you get $60 and $20.63 back. That's exactly what we're going to do here in our inventory worksheet. Right? We're going to go back down here at the bottom here. We're not returning any inventory, but we know that this batch, right, is going to be the most recent one, so 275. And we're going to calculate whatever 50 times 275 is, times 0.15, comma, 2. Oh no, whoa, comma, 2. $20.63. So, let's see. In this case, I still have my 250 units, right? Because in this case, the vendor convinced me to keep my items, so I never returned anything, right? However, they gave me a portion of the money back. That means 50 of those mugs in my batch of inventory were discounted. I never paid $2.75 for them. I paid whatever 15% of that less. Okay? So that means I get my $737.50, right? And I end up getting a $20.63 refund. So I'm at $716.87. Okay. So, therefore, I need to now spread my cost, my total cost of 716.87 across my 250 units. So in this case,
to 87.
okay, 286748. Okay, good. So let's see what happened next. Then, here on May 10, we end up selling 30 mugs for $9.99 each for cash. Okay, so we end up selling 30 mugs at $9.99 each for cash on May 10. So how should I record this transaction? Good. May 10, we got cash in sales, and here we sold 30 mugs. So in this case, what was my total sales if I sold 30 mugs at $9.99 each?
299.70.
Okay. How much tax will I be collecting?
24.73.
Good. So overall, in grand total, how much cash should I be receiving? Okay, $324.43. Okay. May 12 rolls around, and you end up selling 60 mugs at $9.99 each to customer B on an account, and you gave him terms 10%, 10 net 30. So in this case, you sold 60 mugs to customer B on an account. So how should I journalize this?
Accounts receivable.
Good. It is, what is this, June 12th? Sorry, May 12th. We end up selling 60 mugs to customer B, right, on an account, and we're going to offer him 10% if he pays in 10 days. If not, the bill is due in 30. So in this case, how much is going to be his total amount of sales if you sold 60 mugs at $9.99?
599.40.
$5.99.40, okay? And then how much tax are you going to be charging customer B?
49.45.
Okay? So in grand total, how much does customer B owe me?
$648.85.
Good, right? 648.85. Right? Right? Then a couple of days later, customer B decides to return 30 of those mugs and wants a full refund. So in this case, maybe he ended up not needing those extra 30 mugs, or he just doesn't want to have them on hand, or maybe he used only 30 of them for his event. I don't know. Whatever reasons that customer B had, now he came back to the store 3 days later saying, I'm going to return 30 of these mugs. Okay? And I want a full refund. So in this case, how do I record the refund for customer B? So in this case, I'm going to be moving on to my next journal here. So 6 on May 15, right? Customer B decides to return 30 mugs for a full refund. Not accounts payable, right? It's the accounts payable is used when we owe money. Accounts receivable, good. Now in this case, I have to reduce the amount that he owes me, right? So that's gonna be something that we're going to put in last. Okay. So in this case, customer B is returning the coffee mugs to us. Okay. We sold to customer B, and now customer B is trying to return.
Return on allowance.
Not purchase, right? We're not buying and returning. It's the customer.
Return on allowance?
Sales returns and allowances. Yes. Okay. So that's why I emphasize a lot that yes, it is a returns and allowances, but you have to figure out who is returning. Is it us, the provider, the purchaser, right? Are we returning to our vendor? So it's a purchase returns and allowance. Or is a customer returning back to us, which is a sales returns and allowances, okay? And what else do I need to return?
Sales tax.
Yes, I have to give him a portion of his tax money back as well. Okay? So in this case, right, I'm going to go ahead and make a note here saying customer B returns 30 mugs for full refund. Okay? So in this case, right, if he is returning 30 mugs, right, how much do we originally charge him for every mug? $9.99, right? So in this case, how much is my total sales returns and allowance? $299.70. So in this case, how much tax am I also going to be giving back to customer B? $24.73. Very close. Very good. $24.73. So therefore, in grand total, I'm going to be refunding customer B $324.43. So since he never paid me in the first place, it's going to reduce off of his account on what he owes. So in this case, think about it like a credit card, right? He purchased something on a credit card, you're not going to give him money back. You're going to refund it back to his account. Okay? So therefore, we're going to reduce the amount that he owes me to $324.43. Okay? That very same day, you also end up selling an additional 25 mugs for cash. Okay, so that very same day, you end up selling 25 mugs for cash. So in this case, I need to record my sale of mugs for cash. On May 15th. Okay. How much is my total sales if I sold 25 mugs at $9.99? $249.75. How much tax will I be collecting? $20.60. So in grand total, I should be receiving $270.35 for this sale. Okay. So then May 20th rolls around, right? May 18th, excuse me, I skipped one. May 18th, right? We end up, customer A decides to pay in full with cash. Okay? So customer A decides to pay in full with cash. Now let's take a look at our records. When did we sell to customer A? Let's see. Okay. May 6th, right? May 6th. You sold to customer A. All right. So that means we have our totals amount there. Now, what else did we give customer A? We offered customer A terms, right?
Yes.
Okay. Now, this is a condition that customer A can take a 10% discount off of the items if they pay within 10 days. If not, the entire bill is due in 30. So in this case, right, did customer A meet the discount period? If customer A pays on May 18.
Yes.
Let's try again, right? So so if I sold to customer A on May 6th and I offered to give him the discount if he pays within 10 days. Now, what is 10 days after the 6th?
Right, you have to.
Right. They missed it by 2 days. So in this case, no discount can be taken off. So in this case, what we're going to do is we're going to take a look at customer A. Now, second thing was, did customer A make any returns or any allowances? No. Good. So in this case, customer A is good. So let's go ahead and take a look at my journal. How much does customer A actually owe me? Okay. So May 6th. Okay, May 6th. Customer A owes me a total of $216.18. Okay. And therefore, right, customer A, right, they said that they're going to pay me back in cash for $216.28. Okay. So how do I record a payment received from customer A?
Accounts receivable.
Accounts receivable, okay. Right, you're going to reduce the amount that customer A owes me. And what did I receive from customer A? How did customer A pay me?
Cash.
They paid me with cash. Okay. So in this case, let's see, what was the total amount again on May 6th? May 6th accounts receivable was $216.28. Okay. And now I need to make a note here that customer A paid in full, and that's it. Because no receiving any discounts or anything like that. Customer A paid in full. Okay. Now, of course, if a customer makes a payment, does that affect my inventory at all?
No.
No, it will not affect anything with inventory because we're not making a payment. The customer is. Okay. So last transaction we'll do here is going to be we sold 50 mugs for $9.99 each for cash. So in this case, let's go ahead and journalize that we are going to be, we sold 50 mugs for cash. Okay. So in this case, how do I journalize this?
Accounts receivable.
Not accounts receivable. We sold it for cash.
Oh. Cash.
Okay. So therefore, we received cash for the sales. Now in this case, I sold 50 mugs. Okay. So if I sold 50 mugs, right, for $9.99 each, what is my total amount of sales? $499.50. How much tax am I going to be charging or collecting?
$31.21.
$41.21. So therefore, I should be receiving a total of $540.71 for this sale. Okay. All right. Everyone good so far? Okay. So I'm going to go ahead and stop here and we'll go on a quick break, okay? So right now,